The modern economic system is a vast, intricate web shaped by centuries of innovation, conflict, cooperation, and adaptation. At its heart lies the market, a dynamic arena where buyers and sellers interact, exchanging goods, services, and ideas. The market's invisible hand, as described by Adam Smith, subtly guides resources toward their most valued uses, rewarding efficiency, creativity, and risk-taking. Yet, the market alone is not infallible. Alongside it stands the state, wielding policies, regulations, and institutions to correct imbalances, provide public goods, and ensure a measure of fairness. Taxation is one of the state's most powerful tools. By collecting a portion of individuals' and businesses' earnings, governments fund schools, hospitals, roads, and more. Taxes can also be used to redistribute wealth, narrow inequalities, and steer economic behavior, subsidizing clean energy, for example, or discouraging harmful activities like smoking. But the balance is delicate. Too much taxation can stifle growth and innovation, while too little can leave vital services underfunded. Money, in its many forms, is the lifeblood of this system. From ancient coins to today's digital currencies, money simplifies exchange, acts as a store of value, and serves as a unit of account. Central banks, like the Federal Reserve or the European Central Bank, are the stewards of monetary policy. They manage the supply of money, set interest rates, and strive to keep inflation in check. When governments print money or increase the money supply without a corresponding growth in goods and services, it can lead to inflation, the gradual erosion of purchasing power. This is why debates about monetary policy are so heated. Too much money chasing too few goods can trigger spirals of rising prices, undermining trust and stability. Globalization has woven national economies into a single, interconnected fabric. Goods made in one country are sold in another. Capital flows freely across borders. Ideas and technologies spread at unprecedented speed. This global marketplace has lifted millions out of poverty, but it has also created new challenges. Inequality persists within and between countries. Some amass vast fortunes, while others struggle to meet basic needs. The reasons are complex. Education, access to opportunities, inheritance, geography, and sometimes sheer luck all play a role. Numbers and data are the language of modern finance and policy, but they can both illuminate and mislead. Averages, for example, can mask important details. If one billionaire enters a room of ordinary people, the average wealth skyrockets, but most people are no better off. Probabilities help us navigate uncertainty, but they can be misunderstood. The principle of regression to the mean reminds us that extreme outcomes, whether in sports, business, or test scores, tend to be followed by more typical results, simply due to chance. Financial fraud and data manipulation can wreak havoc, from misleading shareholders to destabilizing entire economies. Recognizing the signs, unrealistic returns, inconsistent figures, or data that seems too perfect, is crucial for making informed decisions. Simple checks, like comparing averages, medians, and distributions, can provide early warnings. From paper notes issued by central banks to cryptocurrencies like Bitcoin and Ethereum, the evolution of money reflects our changing needs and technologies. Each form of money raises its own questions. How is its value determined? Who guarantees its legitimacy? What risks and opportunities does it create? Cryptocurrencies, for example, promise decentralization and privacy, but also pose challenges in terms of regulation and volatility. Ultimately, money is more than coins and bills. It is a measure of trust, a driver of innovation, and a force that shapes our lives. It affects inflation, influences crises, and determines the rhythm of our daily existence. By understanding how markets operate, how governments intervene, and how data can both clarify and confuse, we are better equipped to navigate the complexities of the modern economic world. Knowledge is the key to making sense of our financial system and to making it work for everyone.